All right, I'm showing 131, so we can kick it off. Yeah, so thanks everyone for joining us here today for the Kelson Apartments offering. This we really haven't had a direct investment offering in quite some time, so I'm really excited to highlight this with one of my colleagues here today on the acquisition side, Kyle Bolero. He's a director of acquisitions. At the end of the presentation, we'll have some time, as we always do, for the Q&A session. You should see on the bottom of the webinar a Q&A box, so make sure you drop any questions you have in that section below. And just as a reminder, if you could make it, this recording is will be available through email as well as posted on GinkgoVest where this deal is available. And then I guess with that, I'll sort of kick it off to Kyle to walk us through the offering here.
Thank you, Rada. Good afternoon, everyone. Kyle Bolero. And as Rada mentioned, I oversee the acquisition-related activities for the firm. We are really excited today to present to you a transaction that has been in the works for a couple years now, and is something that we feel to be straight down the fairway for us here at Ginkgo, completing a lot of the similar type projects in this submarket in the past. So excited to be here and look forward to presenting the opportunity. Today, we're here to discuss the Kelston, which is a 310 unit community built in 1986 in East Charlotte. The property is currently in distress given the capitalization of the community, and we can discuss that in a little bit more detail. The seller has a loan maturity coming up here in December and has to sell. So they're highly motivated. They've gone through a couple failed transactions over the last 12 months, and so they approached us earlier this year with the understanding that we've closed transactions with them in the past, and they needed a surety of close, and so we think we've kind of structured ourselves a really good deal. We have been able to get comfortable with the distress here, just given our presence in the market. We currently own and operate 1,400 units across 6 different properties in this East Charlotte market. So we have a really long-standing relationship in this East Charlotte market. We have a lot of great operational data to help support the assumptions here. As I mentioned in the past, we have bought a transaction from this owner in the same market with a lot of the same themes and have really done a great job with that deal, and we'll discuss that later, called Hickory Woods. But I first wanted to start by highlighting some things that are really exciting about this micro location. If anyone here is familiar with the East Charlotte market and the history of that market, this Eastland Mall site will probably ring a familiar tone to you all. It was once a very predominant mall in this area, built in the 1970s and up until the early 2000s, when most malls around the country had struggled, and in the mid 2000s it closed, and the site has virtually sat derelict for the last 15 years, which is not great for this whole submarket as well as this micro location. So, Rada, if you want to move to the next slide. With some really exciting news over the last couple of years, the city of Charlotte and the county owned the site, the 80-acre site, former mall. The mall had been demolished and has sat vacant for the last couple of years, but in 2022, the city partnered with Crosland Southeast, who is a large mixed-use developer based here in Charlotte, but has development experience across the Southeast, to re-envision the 80 acres site. So it's a combination. The Eastland Mall redevelopment site is a combination of private and public investment. The public side, the city of Charlotte and Mecklenburg County have invested about $120 million of capital into the revitalization of this location, of this site. Crosland is actively in construction with multiple components. And we think that this is going to really turn around. This is going to be a great addition for the East Charlotte market, but I think, or we think that this is going to have a very meaningful impact to this micro location, and more specifically to the Kelston. And just, with a lot of these larger redevelopment stories, they may or may not get off the ground. In this particular instance, there's been a lot of conversations over the years about getting started, and what really makes us happy is that this site has all the horizontal work has been done on the site, and a lot of the road infrastructure is in place, and that was funded through a lot of county and city dollars, and there are multiple vertical components of the site either that have been completed or are very close to being completed. So something that has been, this development has been in discussion for many years, is actually coming to fruition, which is really exciting for this location. So Crosland Southeast has delivered a senior housing deal located on the west side of the site, 70 units. They delivered that in January of this year. And they're actively in construction on 274 market rate units, with the expectation of delivering those in November or December of this year. So very, very close to having that delivered. And then there's approximately 150 single-family home and townhome sites off the backside of the property that Saucy Burbank, who is a local home builder here in the Charlotte market and does a really great job of and thoughtful job of developing residential neighborhoods, is planning on building starting their portion of the project. So they've already built 5 or 6 homes, and the model homes, and are in the process of selling those. The price point on those single family homes will start north of $500,000, which is really a good positive indicator for us of the economic change coming into this location. So Crosland's redeveloping 60 of the 80 total acres. The city and county are retaining 20 additional acres for recreational and municipal use. So on that front side of the property that fronts on Central Avenue, you'll see that dark green area where it says Eastland Park site. That is a 5-acre site that has fully drawn and funded by the city. They just broke ground on it last week and are working through the build out of that park over the next couple of months. And then on to the east side of the site, where you kind of reach the corner of Albemarle Road and Central Avenue, that is an additional 15-acre site that's retained for a mixture of recreational related activities. The plan is to, and the city has funded to build 6 soccer fields, artificial soccer fields, as well as they are in working with a group to build a 100,000 square foot indoor recreational facility that will be able to house 10 full-size basketball courts. And one of the major themes of this redevelopment is, bringing sports to this side of the city, not just local sports, but being able to host large recreational tournaments and bringing people to this location in the city. So this This site has, long stand quiet, is now actively being engaged, which is really exciting and is going to have a tremendous impact on our site. So one last thing I would touch on the Eastland Mall redevelopment is when they shut down the mall, our site lost access to Central Avenue through the mall because they fenced in the entire boundary area. And so all of the existing residents have only been able to access our site through Albemarle, up Jenkins, through a residential neighborhood. And it's not that inviting. It's not great for drive-by traffic. But with the redevelopment of the Eastland Mall site, they are putting a connector road. They've already laid the foundation in the rough asphalt, and they've put in the street light onto Central Avenue. So once that road opens up, this site, our site, the Kelston, will have a brand new front door, which we think will really will be a really positive impact to our community and give a much better street presence and better accessibility for our residents. So you can see that highlighted with the red circle on that lower right corner picture, which is Scotts Field. Will connect into Central Avenue on a lighted access. So very exciting, and we think it'll have meaningful impact to our communities. As I mentioned earlier, we have a lot of experience in this East Charlotte market. We currently operate 6 communities in very close proximity to this Kelston site. All of the communities that we own are very similar type workforce housing stories, and frankly, most people on this call are probably invested in some of those deals as well. And I don't have to tell you guys the projects that those communities were. Many of those communities that we bought were in similar type economic distress or operationally distressed conditions, and in fact, some of them were probably in worse condition, like Central Point, as an example, was probably twice as worse as what we have here at Kelston. But these communities we've owned, some of them for over 10 years, and have a lot of operating experience in this market, a lot of the same turnaround experience in this market. So we were able to get comfortable with this transaction just given our experience in this market, and we used a lot of the data from these communities in preparing the underwriting for the Kelston. As an example of that, currently at the Kelston, the in-place average rent is right around $1,200. And as you can see, at Central Point, we're running we have an effective rent of $1,430. So there's clear headroom between where we are at Kelston today and where we can be at Central Point. So good market data to support our underwriting. There's strong demand for housing in this market, as most people are probably familiar. East Charlotte is the bastion for affordability, attainability, which makes it very attractive to residents. It's also similar to Uptown. There's good accessibility through Independence Boulevard and 277, 485, W.T. Harris Boulevard. So a lot of people choose to live in this side of Charlotte, one, because it's great accessibility. You can from this site, you can get to Uptown Charlotte within 12 minutes with very minimal lights, street lights or traffic lights, as well as you can get to other areas, employment nodes around the Charlotte market, like South Park and University area through W.T. Harris and Sharon Amity Road. And then, it's this East Charlotte, what we've seen over the last decade or so is this economic wave that has made its way out of Uptown Charlotte through 277 and down Central Avenue. And so you're starting to see some really desirable neighborhoods pop up, like Plaza Midwood, as an example, or Noda, are two of the more favorable submarkets in the Charlotte MSA. And that's really occurred over the last 10 years. And what we're continuing to see that economic wave come further and further down Central Avenue. And one of the catalysts we think will be this Eastland Mall redevelopment, because it's a substantial presence here in East Charlotte. It's just going to continue to draw that economic wave further down Central Avenue. So we're excited about that. And then the next slide is the transaction that we referenced initially, which is a deal that we bought from the existing owner. When we bought it in 2022, it was under the name of Axiom. We have since rebranded it to Hickory Woods, and the lower left corner is the performance 2 years after acquisition. And I think it's a powerful story of when we bought Axiom, similar type vintage 1980s construction off of W.T. Harris. There was in place rents of $11.80. Within 2 years, we had moved rents to $13.16. Occupancy levels were very similar at Hickory Woods to comparatively to Kimberly Glen, and not Kimberly Glen, to the Kelston, and we were able to stabilize occupancy very quickly. And what's the most powerful is those last three rows. We were able to move revenue over a 2-year period by 44.5% and NOI by 94.5%. And really, I credit this all to our operations team, because we are so entrenched in this East Charlotte submarket. We have the operating infrastructure in place, the experience of operating similar type communities here. It's something that the current ownership and management team does not have at the site, does not have that experience, and we think we can implement our professional property management team and really stabilize the community in a very fast manner. So we think Kelston is somewhat of a version 2.0 of Hickory Woods. That's exciting to us. It's also one of the reasons why we got the deal, because of our previous experience in closing this transaction with the owner. They were able to get comfortable and looking for assurance of close, and we were able to give them that. So another positive. That's mostly what I've wanted to discuss today. Rod, I don't know if I've missed anything or if there's any other questions in the chat that people would like for us to discuss.
Let me just take a quick look here. I was going to go through a lot of this information is on GinkgoVest and the offerings, but maybe I can touch on a little bit of our sponsorship for those of you that are not familiar with Ginkgo, and then touch on how to invest and maybe come back to the Q&A. But for those of you who aren't familiar with Ginkgo, we've been around since 1985 through many different iterations. Essentially, principals started buying multifamily in the Southeast. The company had a tenure where it was listed as a publicly traded company on the American Stock Exchange under the ticker BNP. Before the financial crisis, ended up selling to an Australian company called Babcock and Brown. And then at some point, after they're declaring bankruptcy, principals bought the manager back and started to fold in many of the assets into a non-traded REIT, where I'm sure several of the folks on the call are participants of. Currently, we have exposure to about $1.2 billion of workforce housing in the Carolinas. We're in 6 markets: Raleigh, Durham, Winston-Salem, Charlotte, Wilmington, Columbia, and Charleston, South Carolina. Historically, our occupancy has been anywhere from, I'd say, 93% to 95% across the portfolio, with about 1.5% allocated to turning units. I think what's most compelling too is principals, board members, and employees own about 35% of equity across the portfolio. So certainly alignment of interest. So again, for those who aren't familiar with Ginkgo, just wanted to sort of broaden the aperture from a sponsor level. Um, the next item here is just highlighting how investors can indicate interest and get allocated investment in this particular offering, but also highlight a couple other investment opportunities that are available and are closing pretty imminently. So we do have our investment marketplace called GinkgoVest.com. Once you go to GinkgoVest.com, on the top right, you should see an Invest Now button. That'll take you to three categories of investment options, which are live, waitlist, and closed offerings. So if you click on View Offering within the Kelston, there's ample amount of information there, which Kyle sort of highlighted some key points there, but we also have a more robust case study. There are some comps in terms of rentals and sales to sort of support our underwriting. That's all pinned to the bottom of the offering memo. We just wrapped up our legal docs, so that's the PPM subdoc and operating partnership agreement. So that should be added there shortly. And then most importantly, towards the top of the offering memo, there's a little form there, so you can indicate interest for an amount that you'd like to proceed with, and we will follow up with necessary paperwork. Just want to highlight the fact that, as I mentioned earlier, this is our, I think, first direct investment offering, maybe in the last 18 months or so. So at this point, we have about 55% of the offering subscribed. I want to highlight that our anticipated closing dates, meaning your documentation and funds, are required to be completed by November 7th. So a short fuse here. We do have two other investment offerings that are up. I won't go into too much detail, but we do have 3 months notes that are being offered at up to 6.96%. That is closing at the end of this month, October 31st, and we obviously do rolling closes in a REIT. And then lastly, just wanted to make sure that everyone's well aware that up until the end of this year, we have reduced our minimum in the REIT and notes. So the REIT is available at $10,000 increments, and with the notes, it's $5,000. Just sort of, wanting to either get some individuals allocated who might have been considering investing into Ginkgo's investment products, or folks that just want to add more to their original allocation. So with that, just wanted to highlight how folks can reach us, and I will sort of check here if there's any questions. Maybe Kyle, if you can just, while the questions are coming in, could you touch on the debt? What type of financing, what rate, duration is IO?
Sure. Yeah, Rada. And while I do that, do you want to work on unmuting the callers? Just in case anybody wants to ask a question via the phone. But yeah, to answer your question, Rada, we are pursuing because of the operational distress, this community isn't ready for prime time agency financing, and in lieu of that, we're pursuing bridge financing at what we think to be a pretty compelling level versus versus agency execution. So we have secured a bridge loan with a long-term banking relationship of ours They've provided us financing at 70% loan to cost at 175 over SOFR. So when you look at it versus agency, it's actually very similar type financing. It's on a 3-year initial term, full term IO, and we have 2 1-year extensions to take this out to 5 years if we like. So $29.4 million day one funding. Yeah, we think that this is a very accretive way of financing something at this point.
Are there plans to refi or recap prior to, I mean, we had highlighted sort of a 5-year term here, which, always contemplates either a sale or, rolling the equity into the REIT. I'm getting ahead of myself, but is there a recap before the 5-year hold period?
With the initial deal, we have the ability to take this out for the entire lifespan of this investment. Our initial impression, our initial thoughts would be to continue the existing loan in place through maturity, but there might be a potential in the future to look at a refinance after we stabilize the deal and potentially be able to extract some of that value creation out of the deal.
Got it. Just remind everyone, if you have any questions, drop them in the chat bot. And maybe one more question. I mean, seems pretty impressive, sort of the Eastland redevelopment and development. Do you anticipate any of that supply sort of competing with the Kelston, or is that sort of a little bit more of a different product?
Yeah, it's Charlotte, like most cities in the Southeast, have seen quite a bit of new construction supply hit our markets. In 2024, 16,000 units. 2025 is more like 12 to 13,000 units. So we're still working through a good amount of supply. East Charlotte has not seen the same level of supply. If you actually were to look at where the new construction is being delivered in Charlotte specifically, you put it on a heat map, you will see that a lot of that supply is occurring up in north and south of the light rail line, the Blue Links light rail line, which is the commuter train that runs from UNC Charlotte University area down to Pineville. And so over the last decade plus, the city has been promoting heavy density in and around those train stops. And that's where a lot of that new construction has occurred. As it relates to East Charlotte, there are a couple communities going up more proximate to Uptown, like in and around Plaza Midwood. But yes, there's 274 units being developed here at Eastland Mall. We think that this is a net benefit for us because we share the same location at a fraction of the cost of that new construction market rate community down the street. So we will be able to be with $400 or $500 below per chunk rent below where a lot of those new construction deals will be offering their rents at. So we think it's a good, we'll be able to draft off the back end of their rents.
And then actually had a email from a potential investor earlier this week, but maybe you can highlight. So this is sort of a sidecar investment where investors can sort of get additional allocation to this property as an LP K1, but the REIT also has exposure to the Kelston as well. Is that correct?
Yes. Ginkgo Multifamily OP-LP, which is the entity in which we own, will have approximately 2.85 million, which represents just around 13-14% of the total equity for the deal.
Got it. Okay.
One question that I see here, Rada, is where where do we feel the cycle, the rental cycle, investment cycle is in Charlotte? It's a big question. I don't know if we have enough time to fully answer this question. But we think that this is a great opportunity, just given the market data that we have and the operating data that we have currently. All the assumptions that we've made, from whether that be the rental rates of classic units, renovated units, our operating expense data, it's all coming from the communities that we currently operate in. So it gives us a lot of conviction in those numbers. And as it relates to some of the direct return projects here, I'll just highlight a couple capital related projects. We are planning to do 81 interior renovations, consistent to a level that we've completed at Central Point, Kimberly Glen, and Hickory Woods, and installing outdoor patios on 43 units that we've also done at Central Point, Kimberly Glen, and Hickory Woods. And the last thing, two other things. All the units have washer dryer connections, and we are planning to install washer dryer equipment in all units. And the last thing I will bring up is that this community uses a high level of water, elevated level of water, the $840 per unit per year. That's around twice as much as what you would typically see for a community of this size and this vintage. We are planning to come in with energy conservation upgrades, particularly around water usage. So going to low flow shower heads, toilets, and faucets to help reduce the consumption of water, lower our residents' utility bills, as well as this community is sub-metered. It is recovering at a low rate, 57% of the actual expense. What we did find during our due diligence period is that there are at least 34 sub-meters that are not properly reporting usage, and we have worked with our vendors to identify repairs to the system, and we'll implement that after closing. So that will ultimately lead to those two projects combined will ultimately lead to a more efficient utility bill for the total community, in lowering the total consumption and improving the total collections of that expense.
Maybe worth highlighting what's sort of like the makeup, sort of like bedroom configurations. Has it sort of mirrored Hickory Woods and Aurora or some of the other Central Points locations?
Yeah, so there's 310 total units. It's a mixture of 1s, 2s, and 3s. It's very similar type unit mix as what we have at Central Point. So 1s, 2s, and 3s, really good size units, particularly on the 2s and 3s, which and very functional open concept type floor plans, which make it very desirable for this resident demographic.
Okay, I'm gonna see if there are any other last questions here. I think we've cleared the queue. Um,
Rod, is there ability to unmute the phone lines?
I think that's a preset that needs to be done in the webinar, so don't think that's an option. I guess with that being said, you can always follow up with us through email or call myself or Kyle. But with that being said, just want to thank everyone for joining us. If you think of any questions, let us know. The webinar is again being recorded. Just want to thank Kyle for walking us through the investment highlights, and yeah, feel free to reach out. Thanks again.